Mike, is there a vacuum in oversight?
Well, there has been an oversight vacuum in the banking industry. It started before the financial crisis. That's when the investors said, oh, regulators are watching the banks. The regulators were like, oh, the investors are watching the banks. But it turned out nobody was minding the store, and then you had a financial crisis. Fast forward 10 years later, and now the regulators have done a great job to make banks stronger, but there still needs to be extra oversight to make sure that pay is aligned with performance, make sure these banks are going to meet their financial targets, that their strategies are reasonable. And, to do that, I go to annual meetings. I figure it's enough hearing from one bank CEO gets replaced by another. Let's talk to the overseers, the board of directors. And the benefit from going to annual meetings, it's my once a year opportunity to hold directors publicly accountable. That's my only chance. So if you want to, talk to the lead director and put the lead director on the line, you go ahead and do that. Like Citigroup, I had a chance to ask the new chairman, do you think Citigroup will meet its financial targets? And he, John Dugan, said, yes, we think they'll meet it. So next year I can go back. If they don't meet their targets, if they don't meet it, what are you going to do about it? So I like the idea of holding management teams accountable. But if shareholders don't step up to the plate, then Washington, D.C. is going to fill in.
Well, to that point, aren't shareholders stepping up to the plate a little bit more? ISS, for example, just advising shareholders against the CEO package for Jamie Dimon at JPMorgan Chase a little earlier this month.
I'd say in general, absolutely not. Shareholders are not stepping up to the plate. I mean, that's one reason why I think you've had a rise in activist investing, because they help to narrow what I would call a governance gap. Having said that, I mean, the proxy advisors certainly have a function and service. In the case of State Street, they have worst-in-class returns, and the proxy advisors didn't vote against the pay. I thought they should have turned it down. I was in Boston yesterday at the annual meeting. It got approved by, I got blown out for my effort. On the other hand, JP Morgan has best-in-class returns, and the proxy advisors, ISS, is saying we should turn down the pay. I think in this case, it's more of a matter of form over substance. Investors that I speak with don't say, oh, Jamie Dimon gets paid too much, but you can't get complacent with how you set the targets. So that's certainly one question I'll be asking the JP Morgan board next Tuesday in Chicago when I go to JP Morgan's annual meeting.
Mike, some banks in the United States still have one person occupying both the chairman and the CEO roles. Not all, but some, and you just mentioned a few names there. How do we have decent oversight of banks, and particularly when it comes to how they're run, if those two jobs are secured by the same person?
Well, look, it's not one size fits all. I mean, look at Citigroup earlier this decade. You had a separate chairman, you had a separate CEO, and they were a lousy performer. They were not accountable to shareholder interests. On the other hand, you look at JP Morgan, Jamie Dimon is both chairman and CEO, and that's pretty much the best performing large bank over 1 or 2 decades. So I think companies that have not gotten the job done, or banks that have not gotten the job done, then I think it makes a lot more sense to have a chairman. But when you have a chairman, that person needs to be responsive to shareholder interest. You can have a strong lead director that kind of serves that function. But what I'm talking about is much more general, and that is shareholders needing to step up to the plate and hold managements more accountable. And again, that's one reason why I go to annual meetings. But the issue here is State Street is one of the big 3 index funds. And so they tell other corporations how to act. They tell other corporations, make sure you have pay aligned with performance. And then you look at State Street, and what have they done that? Absolutely not, in my view. And so I guess it's a case of, do as I say, not as I do. So if one of the big referees, for corporate America isn't following their own advice, that does not set a very good tone at the top. And that's something I certainly brought up at their annual meeting yesterday.
Regulators often end up fighting the last war. Are we guilty of that right now, do you think?
Absolutely. I was trying to yell from the mountaintop, last decade, and 2 decades ago, even with when my firm was going through a merger, I thought we should have hearings with that. And now, 10 years later, the regulators have done a great job. Don't get me wrong. The balance sheets at the banks are the strongest they've been in a generation. I thought the 10-year look back to the crisis made sense. Let's just make sure that doesn't happen again. Healthy paranoia is good for the banking industry. Having said that, we've had that. Now let's move on. If you want to have hearings, let's talk about the threat of, Chinese or Asian banks and digital banking. Let's talk about, setting some common standards. Let's talk about things that truly matter to the long-term health of the economy. And also, now you have a hearing for the BBT and SunTrust merger. I saw that. I was like, wow, where did this come from? And part of the explanation was because the Fed, quote, rubber stamps bank mergers. Absolutely not based on my experience. I was one of those people that did that 30 years ago at the Fed in Washington, D.C. These are dedicated government service workers working very hard dissecting these mergers. And by the way, when the merger doesn't work out, when I was a staff member, we would say, why don't you withdraw your application and resubmit it if and when you get it under control. So I think it's gone a little too far that way, even while I recognize the regulators have done a fantastic job.
Give us an update on the BB&T SunTrust merger. You just said there's going to be a hearing. It's supposed to find out if there are going to be public benefits to this merger. But apart from the public hearing, assuming that at some point the merger closes anyway, where are we on that?
Well, look, I think this merger is probably the best bank merger you're going to get over several years. You make two strong banks in the Southeast even stronger. It allows them to compete, with the larger banks. By the way, if Congress or the House Financial Services Committee makes it really tough on these two entities to merge, or let's say they help turn it down for some reason, who is that doing a favor for? Do you know who gets the favor? Bank America. I mean, you're creating a stronger competitor to compete with like Bank America and JP Morgan. So I think from that standpoint, it certainly, from a shareholder standpoint, certainly would be in the public interest. But it's a good merger. It should close later this year. But I will say, when I saw, hey, there's a hearing, in front of the House Financial Services Committee, I was surprised. The last major bank that I remember having a hearing was Citigroup when they had their merger 21 years ago. There was a hearing, but that was in conjunction with a change in the law. So this is pretty abnormal. And again, I'm still devoted to the Federal Reserve, having worked there 30 years ago. And I think they do a fantastic job analyzing bank mergers. To have another level of scrutiny, I think it'll get through, but it's just a little surprise. Puzzling.
Mike, one final quick question. You bring up the Federal Reserve. Banks are a high beta play on the U.S. economy. The market is now pricing in rate cuts. What is your sense of the relationship between what is happening here in the economy, the market's perception of the economy, and how the banking sector is going to perform? I don't think you've got any sells on U.S. banks at the moment.
Well, I didn't have any buys a little more than a decade ago. And so this is as bullish as I and we as the firm have been on bank stocks since a long time. Going into the year, it's the first time ever that I've had buys in all the largest banks. So I'm certainly very bullish. I'm focused on the structural changes taking place. You're approaching best in history efficiency, pre-tax margin, returns leverage adjusted, the return of capital, and people are too fixated on the cyclical factors, which seem to be fine. Our house view is that the reflation trade could be back on. That's based on our strategist, Chris Harvey. If that's right, it could be a good rest of the year for the banks.